Welcome to the CU 2.0 podcast.
Hi, and welcome to the CU 2.0 podcast with big new ideas about credit unions and conversations about innovative technology with credit union and fintech leaders. This podcast is brought to you by Qwillo, the real-time loan syndication network for credit unions, and by your host, longtime credit union and financial technology journalist Robert McGarvey. And now, the CU 2.0 podcast with Robert McGarvey.
In mid-February, Curql, the collective of 160-plus credit unions, announced its first blockchain investment into Stablecore, a company that provides digital asset infrastructure for credit unions and banks. Literally hundreds of billions of dollars now are flowing into stablecoin, a digital currency backed by fiat currency, and accordingly it has little volatility. Big banks are pouncing on stablecoins, but the credit union problem is a lack of tools for managing digital currencies. Enter Stablecore. It's designed to enable credit unions to manage member portfolios of digital currencies. It's a solution that's needed, and that's why Curql chose to put money into Stablecore. On the show are Nick Evans, President and CEO of Curql, and Alex Treece, CEO and co-founder of Stablecore. They tell their story. It's a must listen. Along the way, Nick offers insights into Curql's investment strategy, and Alex issues an invite to credit unions that might be interested in a pilot that he is putting together. Sure, you are glad that you sat out Bitcoin, but stablecoin is a very, very different entity, and now's the time to get to know about it. Listen up. What does Stablecore do? What's the raison d'etre of Stablecore?
So Stablecore, you can think about Stablecore as essentially like a digital asset core. So almost like, FIS, Jack Henry, Fiserv, but for digital assets. And it's actually helpful to take a step back and explain the sort of problem space a little bit, that credit unions and also banks are facing in the digital asset space. And that's that, as you probably know, all credit unions have this existing banking technology stack, right? So that's things like banking cores, like FIS, Jack Henry, Fiserv. That's things like digital banking platforms like, Q2, Alchemy, the same sort of banking core providers, and also these compliance tools like Verifin and others. But, in short, virtually all credit unions or sort of most credit unions rely on this banking technology infrastructure. And today, given that digital assets is a relatively new space within credit unions, there's not support in that existing infrastructure for these digital assets, right? So if you're wanting to build, inside the credit union space with digital assets, whether that's something like stablecoins, whether that's something like Bitcoin, whether that's something like tokenized deposits, you're generally not going to find that infrastructure from within your existing banking technology stack. So that's kind of on one side. Now, on the other side, there's all this digital asset infrastructure that exists from folks like, the digital asset custodians, people like Coinbase, Anchorage, Fireblocks, these various stablecoin issuers that have emerged, which is, folks like Curql and Paxos, and also these digital asset compliance tools that really focus on blockchain technology and on digital assets for compliance. And there's actually a lot of great companies, great tools on that side that are, very robust. But that sort of digital asset infrastructure is completely separate from this legacy banking technology stack that I mentioned. And so what you have here as a problem is any credit union that wants to be in this space is sort of spread across these two sides. And of course, all that digital asset infrastructure is completely foreign to most credit unions. And so you have this gap here in the middle. And that gap is really where my company, Stablecore, sits. And that's really the problem that we solve. And so again, you can think of us as being like a digital asset core, but what that really means in practice is that on one side, we integrate with all of that digital asset infrastructure. So we integrate into digital asset custodians, into digital asset and stablecoin issuers, into all the digital asset compliance tools, and really bring together all those important pieces that you need to offer those products. And then on the other side, we integrate directly into the existing credit union and banking technology stack. So we integrate directly into banking cores. We integrate directly with these digital banking providers and with existing compliance tools. And what that does is really meet credit unions where they are and say, you don't need to create all this kind of new technology infrastructure to support these digital assets. We're going to take that sort of best-in-class digital asset infrastructure and bring it into your existing stack. And then we're also doing some things in the middle there, things like orchestration and ledgering that basically glue these two sides together. But the sort of effective end state is that as a credit union, you can do things like send a stablecoin payment directly from your checking account, for example, directly inside your digital banking experience, for example. Or you could take a stablecoin that's outside of the credit union and bring that back in as a deposit. Or have other digital asset use cases like Bitcoin accounts or Ether or accounts that members may be engaging with over places like Coinbase or Robinhood, and bring those back inside the credit union and do the seamless on and off ramping of those assets from directly within the credit union. And there's kind of a host of other use cases, things like digital asset based lending, tokenized deposits, many others. But in general, we support all of these use cases and are this sort of entire digital asset system of record for credit unions.
Super. Nick, I was planning to start this show by asking Alex what the heck Stablecore does. He just told me. So let me add, my second question was going to be for you. Why did you invest in this?
For all the reasons he just said. Banks and credit unions in our case, don't have the infrastructure and don't have the knowledge and don't have the bandwidth to do all of the things they need to do to get ready to offer stablecoins and digital currency and digital lending and tokenized deposits to their members. And so we were looking for a solution, and we believe that Stablecore is the right solution at the right time for credit unions to build the infrastructure, but more importantly, partner with somebody that knows what they're doing.
Well, I've talked with a lot of credit unions about stablecoin. Not the biggest guys, not like Navy Federal, and the ones I've talked to are $1 billion plus, and they all are really interested in it, but they're not doing bupkis because they don't really know what to do. It's
That's a good way to put it.
And so you see Stablecore as a solution. So if I'm the CEO of a $3 billion credit union, and I call you up and I say, "Can Stablecore help me get in this game?" You would say yes.
Absolutely, and that's why we invested in them. It's a path forward with very knowledgeable people who understand the insides and the outsides of how all of this works and can help credit unions get in the game. And so, and be compliant about it. That's the biggest thing too, is that Alex and I are meeting with Kyle Hotman next week to talk through this and make sure that credit unions understand what questions to ask, but more importantly, that Stablecore knows how to answer the questions and can help credit unions survive an exam and answer all the questions that an examiner is going to have when they get into offering members the opportunity to buy and sell crypto and stablecoin and things like that. So we believe this is a great solution at the right time.
Now, my recollection is that Hauptman has a favorable outlook when it comes to digital currency.
Oh yeah. He's been talking digital assets, digital currency for as long as he's been on the NCUA board. He's very knowledgeable and really a champion for credit unions getting into this and being present. His big thing is he's not a fan of the banking system. When the banking system closes down over the weekend, and that's the way he'll tell the story. I've been in the room with him many times when he says, it took 3 or 4 days for some transaction to clear, whether it be a international transaction or whatever. And he says money should be available to anybody and everybody in the moment whenever they need it. And so, his big thing is with the entire banking system, and he thinks digital currency and including stablecoin can solve for that problem.
What size credit unions do you see Stablecore particularly appealing to?
I think every size, from the biggest to the smallest. And I'll let Alex answer that question, but that's my opinion.
Yeah, I think on a long enough arc, I think it's really something that every depository institution, whether it's a credit union or bank, and frankly, every financial institution generally is going to have to sort of have an answer for. I think in the near term, we certainly see some of the more medium-sized, larger credit unions moving a little bit quicker. But I think it's helpful framing just to point out that this space. I mean, today we have around 300 billion or so of stablecoins, in circulation. I think that's around 10 trillion of kind of last 12 months volume. So this is already a very substantial payment rail, already a very substantial kind of market. And those numbers about 4 or 5 years ago were around, 10 to 20 billion. So we've seen just absolutely enormous growth in a very short period of time. And of course, we had the Genius Act that just passed in July of last year, and we're currently in that rulemaking phase. And all projections are that we are going to move, somewhere between 300 billion where we are today to 3 to 4 trillion by 2030. So within the sort of next 5 years. And so you can imagine that, as there's, trillions of dollars of stablecoins circulating in the financial system, that even if you're not, doing something like, cross-border payments, like one of these, very kind of specific stablecoin use cases, your members are going to come into contact with these assets, one way or the other. And so I think at a minimum, every single financial institution needs to have the ability to go from checking account to stablecoins and be able to take these stablecoins and bring them back in as deposits. Otherwise, there's going to be this entire system that's sort of building up outside the credit unions that you don't have access to ultimately, and that's going to end up being less deposits and overall less transaction flows, and then also just fragmenting your members' kind of primary financial account relationship with providers that do offer those products.
And I imagine there are many credit union members. I'm one. I mean, I have a Bitcoin stash at PayPal. It's where it's parked. If I wanted to use it, well, I could cash out. That's my only option. Whereas it would be nice if it were a little bit more mobile and useful than sitting there. I like to look at it. It's losing money nowadays. So I don't like to look at it too much, but it did pretty well overall. So, but it's inert. It's just.
Yeah, well, and I think I would differentiate something like Bitcoin and something like stablecoins, but I think it's helpful.
Oh, yeah, absolutely. But
definitely, yeah. But
the world of digital currency, though, it's all, you have some, but you can't necessarily use it in a way.
Yeah, and for things like Bitcoin and other more, call it, traditional digital assets, we see that most folks are using them more as like an investment vehicle, right? If you think about why members and consumers, particularly younger members, between the ages of 20 to 45, are going over and signing up with accounts like Coinbase and Robinhood and Kraken, these places. They're looking at it more as an investment class, as an investment vehicle, versus stablecoins is more of a medium of exchange, more of a payment method. Now we'll see as we get into the kind of rulemaking and as the market expands what the use cases are. But I think it's important to point out here that whether we're talking about stablecoins, whether we're talking about Bitcoin, whether we're talking about tokenized deposits or other types of tokenized assets, all of these assets ride on the same type of rails and they ride on the same type of financial technology infrastructure, right? And that's blockchain technology, that's wallets, that's custody. And so the good news for credit unions here is that whether you start on the stablecoin side, whether you start on the Bitcoin side, whether you start on the tokenized deposit side, this is all common infrastructure, right? If you sort of support one, you've effectively done a lot of the work to support the other. And these are very large existing markets. For example, I talked to a lot of credit unions, really of all sizes, that are seeing pretty tremendous deposit outflows to places like Coinbase and Robinhood and Kraken. And oftentimes those deposits don't come back, right? Folks are sending money over there to engage with digital assets. And so there's a handful of things that are happening there that's quite negative. One is that you're sort of fracturing the account relationship, right? So your members are going to open up a primary financial account relationship with one of these fintechs, which obviously there's that kind of immediate deposit outflow. But then it also sets the stage for future deposit outflow. Secondly, you're obviously losing those deposits, right? So you're kind of losing that interest income. And then thirdly, those are fees that the credit unions could be earning around the transaction fees. And so and what's interesting is that if whether you look in banking, whether you look in credit unions, whether you look on the crypto side or the fintech side, everyone is converging towards the same answer, which is having that primary financial account and offering all these products in one place. That's what members want. That's what consumers want, is they want to have this trusted relationship where all of their rails, all their accounts, kind of, all their products are in one place. And so I think the opportunity here is for credit unions to really seize that mantle and to be that primary financial account, right? And to do that, though, they're going to need to offer these products. And if they don't, then what's going to happen is their members are just going to take their deposits, are just going to take that activity elsewhere. So that's why it's very important to start engaging on this.
Nick, my understanding of Curql is that you're a little bit like MIT, where 100 people apply to MIT and maybe 4 or 5 get in out of that 100. Why did Curql choose to put money into Stablecore? Because I'm sure there were other suitors for those very same dollars.
And there still are today. And we told Alex and Nick, the co-CEOs or the co-founders, that we could possibly invest in others in the space as this evolves. It's evolving quickly. But as of right now, sometimes you bet on the jockey, right? And the jockeys in this case, when you look at their pedigree, I think correct me if I'm wrong, Alex, nine folks formerly from Coinbase and running your company. So the inner workings, the plumbing, so to speak, is being plumbed by a lot of knowledgeable plumbers, if that's an analogy I can use. The connections, the connectivity, they have it, and they have it all. And so, Alex talks about all the other players in the market, Fireblocks and Coinbase and all those folks. We believe that Stablecore has the connectivity and the knowledge on how to navigate all those connections. And so that was very key in our decision process. So they're still building, and they're still creating their product roadmap. There's some things that that we think need to be added to the product roadmap, quite frankly, but we're confident they could do that. And they will do that. So, this is evolving quickly. Right now I just was reading an announcement from TrueStage, the biggest player in our market, is rolling something out for credit unions. So we'll just see how everything shakes out. But we believe we've invested in the right jockeys in this case. It's the right place, right time. And that's not to say that's the only investment we're going to make.
Well, I've talked over the years with enough Sand Hill Road VCs, and they always invest in jockeys. You don't even need much of a balance sheet to get money from them if you have a track record that this guy's he's done a unicorn before. We'll talk to him. We'll put money in him, period. End of discussion. So you're on the right track there.
Thank you.
Now, how many credit unions do you see being involved in Stablecore? I mean, what's your patient money compared to a lot of VC money?
We're not, yeah. And thank you for noticing that. We're not a VC, we're a strategic investor.
Right.
And so, that's, we assume that's part of the appeal as to why Stablecore took money from Curql, in that being a strategic, bringing potential customers to the table. That's what we pride ourselves on. There's 135 investors in our ecosystem right now today, from the largest credit union to most of them are over $1 billion, put it that way. So that's what we call being strategic.
Navy Federal's in Curql now, if I remember seeing a press release.
That's correct. That's what I say when I say the largest. I guess I'm not saying their name, but they are the largest. So, it works both ways, right? So Alex and Nick saw the benefit that Curql brings to the table, and we saw what they bring to the table. And that's usually how this works, in that when you're a strategic, there has to be, it's a dual-sided value prop, put it that way. It's a win-win scenario. Potentially, we're both Stablecore and Curql benefit. But most importantly, we need our credit unions to benefit.
Now, Alex, what was the upside and what's the downside of taking Curql money?
I don't think there's much downside, frankly, if I'm just being candid. And I think it's important to highlight that Stablecore focus, we focus only on banks and credit unions. So we don't sell to crypto companies, we don't sell to fintechs, we don't sell to payments providers. We're very focused on banking. And we actually have multiple other funds, involved in the company, like Curql on the banking side, like BankTech Ventures, which I think has over 100 banks. And so today we have 290 depository institution credit unions and banks that are either direct or indirect investors. I mean, that's obviously been a huge part of our strategy because we focus on banking, and that's really our niche. And when we started the company, there's lots of stablecoin infrastructure companies out there. There's lots of digital asset companies out there, but we saw that there was no one that was really focused on credit unions and banks and really understanding that space and really tailoring to their needs. And quite frankly, selling to and working with a credit union is very different than working with a fintech, for example. And so obviously Curql is, I believe is the largest, if not the largest, one of the largest sort of investment and also strategic investors in the space with a huge network of credit unions. And so it was just a natural partnership. And on top of that, obviously, Nick and his team bring a tremendous amount of expertise to the table for us as we build our credit union product, as we build our credit union strategy. So they've been amazing partners. And quite frankly, we're very lucky and honored to have them as partners.
In my opinion, Curql is sort of the sandhole road of a credit union money. So it's now how many investors do you have in your QZO?
So
credit union QZO.
Yeah, we have. Are you talking to me or are you talking to Alex?
No, I'm talking to Alex. Oh, you have them all. You have hundreds.
Yeah, so we have a handful, including Curql, including some others, and I think it's possible that we may have others that are becoming clients today that could invest. So as part of this, we did set up a QSO, Stablecore QSO, in order to serve the credit union market specifically, and Curql was the first investor in that QSO, and we anticipate having more.
So Nick, you're looking at other companies doing something similar too.
We don't invest where there's 100% overlap. So we would never invest in a company that's doing exactly what Stablecore is doing. As this evolves, as different, what do I want to say, channels, different niches, different opportunities appear, we might look at some other things. But right now, in order for us to invest in this space, somebody's going to have to be doing something pretty amazing and pretty different. And that could happen, right? Or, Stablecore could come to us and say, hey, there's another opportunity over here. We're going to set up a different company. We need investment. So there's some, this is so new and so young. And, at the same time, we look at what happened with NYDIG and the Bitcoin craze from 5 years ago, and that all went away. So we're being very careful that this is not a repeat of that, what happened 5 years ago with the Bitcoin craze. And so we're studying things pretty closely right now and watching.
Well, I remember the Bitcoin thing. And in my opinion, 5 years ago, when I talked to credit union guys about Bitcoin, they'd rather talk about being in the Epstein files than talk about Bitcoin. They ran from this. Whereas stablecoin, they're all interested in stablecoin. They're not afraid of it. Why do you think that's so?
Because it's backed 1-to-1. It's equal to $1.
Right.
It's different. It's not
so you don't have the volatility that I have in my Bitcoin thing, where
right. The risk is beaten out of the system with the fact that it's backed 1-to-1 by fiat currency. The other thing is we've learned a lot about fraud, and we've made sure that Stablecore has those pieces in place around all the compliance and the ability to recognize fraud. And there's going to be fraud in stablecoin. It's a fact. There's fraud in everything. There's fraud in writing checks today. But it's the mitigation, the risk mitigation that we look at from that standpoint.
It's funny. I talked with a fraud expert who told me there's a big spike in, let's call it old-fashioned analog fraud at credit unions, where people are cashing bogus checks, things. Stuff. You see, wow, people are still doing that. Yeah, apparently they're doing it more than ever.
Yeah. Check fraud's a big thing. Analog fraud, as you call it. Yes.
So, Alex, how fast do you think you're going to take off with credit unions? Seriously.
Well, I mean, we already have a bunch of conversations that are very far along. So I think we will, knock on wood, I think we'll sign contracts here definitely in the next, 30, 60 days. We're actually currently running a big pilot program with Curql and Circuit, which is another QSO group within the credit union space that you probably heard of. So working with Circuit and working with Curql members and credit unions to offer digital asset products, right? So things like stablecoin accounts, stablecoin send receive, things like other digital asset accounts, like buying and selling Bitcoin, for example, on and off ramps. And ultimately, the credit unions decide which assets they want to support and which rails they want to support. But it's putting in place the sort of foundational infrastructure that helps them address things like deposit outflows that they're seeing today, things like the stablecoin sort of ramping up period that's happening right now, but then also putting in place the all this digital asset infrastructure that, as I mentioned earlier, is common across all these use cases. And so I'm quite confident that we will have many tens of credit union clients. It's hard to put an exact number on it, but this is definitely the year. I mean, it's certainly not a 2027 or 2028 endeavor. We're already doing things like negotiating contracts, and again, we'll be signing contracts soon, hopefully. And I would expect that by the summer, certainly you'll have credit unions that have announced that they're working with us, and then by the end of the year, like I said, I think there'll be tens and tens of credit unions that have products in production live out to members in this space. Both things like stablecoins, but also these other digital asset use cases like having Bitcoin accounts, or even things like digital asset based lending. There's sort of a whole kind of myriad of products in this space that will be coming out.
Well, once you have a credit union that's actually live, I'd love to have you and the credit union on this show again. I'd love to have a tech guy and a credit union. The credit union is like the truth serum there. Tech guy will tell me anything, but
yeah, absolutely. No, you won't have to wait long. So happy to do that.
Now, my understanding, and I have not followed stablecoin that closely, but my loose understanding is that big banks like JP Morgan Chase are all over stablecoin. I mean, lots of huge amounts of money.
Yep.
Am I right?
Yeah, absolutely. That's something. So, and we actually started on the banking side before we got into credit unions. And so can kind of speak to some of the things that we're seeing there on the banking side, particularly with the larger banks. So yes, all of the large GSIB banks in the United States and also globally as well are very actively investing in digital assets and stablecoins and tokenized deposits, really kind of all these products. And so, definitely the top, 1 to 10 banks for sure. And then also there's, many super regionals and regional, banks as well, call it between 30 billion in assets all the way up to, 500 billion, who are also, are also very aggressively exploring the space. In fact, we actually have some existing clients right now. We have a super regional client today. That's a top 25 bank by assets here in the United States. And so we are definitely seeing a lot of interest from the larger banks, and they're taking the position that they're not waiting around to kind of see what happens. They're getting started, even before like the rulemaking for Genius Act is clarified. And so I think that should be a signal to all smaller banks and credit unions, and even mid-sized ones, that your sort of competitors at the top, I think everyone is sort of very mindful of the competition coming from fintechs, right? Who are trying to win those primary financial account relationships, who are very aggressive in offering these types of products. But folks should know that it's also coming from these larger, these larger banks and credit unions, these sort of regionals and super regionals. And as I mentioned earlier, and then we also have all these de novos that are spinning up. So as I mentioned earlier, everyone is converging to the same point again, which is being this primary financial account, having all the rails, having all the accounts in the same place. And so I think ultimately everyone's going to is going to sort of end up in that same place. And the question is, who's going to get there first? Who's going to do it the best way? Who's going to have the most trust? And I think that's an area where credit unions obviously have a great advantage because they're already that primary financial account. They're very, very trusted. So as you think about a credit union lining up against a large bank or even a fintech, you've got pretty good odds there with your sort of trusted members.
Yeah, I've been worrying about the huge lead that big banks like Chase have in AI over credit unions. It's and this is another area where I think those giant guys are vaulting ahead. I mean, they're just sprinting at full force, and they have so much force that it becomes worrisome. Historically, if you said to a credit union CEO, "Do you wake up in the morning thinking about what Chase is doing?" He'd look at you as though you were nuts. No, of course not. But now I think they have to, because these guys have voracious appetites and they're really good at what they do.
I would comment on the fact that that's one of the reasons we created Curql for credit unions, is in order to have a seat at the table in partnering with great fintech like Stablecore and all the companies we've invested in order to try to keep up. And keep up is a relative term, right? So, we know that JP Morgan Chase is spending $18 billion a year on technology, and we're not going to spend that much, but at least we have a fighting chance, and that's what we're doing. We're pooling credit union resources in order to find the best and most transformative technology that we can in order to compete and stay in the ring, so to speak, with these big banks and the big fintech that are well funded as well.
Well, I've been saying for 5 or 10 years that the secret credit union weapon is the QZO, particularly the tech QZO, because it enables them to compete with much larger institutions. So I've been singing the praise of Circle for some time. So
Appreciate that. Thank you.
I think I got what I wanted from this call. Either of you want to say something that I didn't think to ask?
As I mentioned, we are running a digital asset pilot with Curql and Circuit as well. And I think we're seeing tremendous interest from that. I think we're going to have a lot of credit unions that are involved in that. So for any credit union who's interested in, not just exploring this space, which everyone should be doing, right? If you haven't started exploring, if you haven't, put someone on your team that's responsible for digital assets, you should do that. But for anyone that actually wants to develop real capabilities and really step into this space for the first time, we're offering an ability to do that. And as Nick sort of mentioned, I talked about Stablecore, but before Stablecore, I was over at Coinbase and spent 3+ years there. And we have a team, a lot of people that are also ex-Coinbase that have been in this space for the last 5 to 10 years, building digital asset infrastructure, integrating it with traditional infrastructure as well. And so we deeply understand the space, and we're very focused on credit unions and banks. That is our sort of singular focus. And so for anyone that is serious about wanting to get into the space, we would love to partner and love to be helpful. So we'd love to have those folks reach out if they're interested.
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey again. That's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.